Good morning and welcome to the market forecast. It is Wednesday, January the 13th. My name is John Hoagland. Thank you for trusting me with your time. Hopefully, you're rested and ready for the trading day today if you're already in the markets. Hopefully, things are going your way. As always, we're going to look at our markets in context through the lens of risk management. Very busy headline, dangerous week. Lots of opportunities, lots of ideas, lots of thoughts. We're going to take a look at those here very shortly. As far as economic numbers are, 7:30 this morning, the CPI number came out. 9:30 this morning. These are, of course, in Central Time. The EIA Petroleum Status Report is due out. There are 4 talking feds speaking throughout the day today. We had 6 yesterday, most of them remaining pretty dovish as far as policy moving forward. Nobody really wants to rock the boat here. And at 11 o'clock, the Fed's Beige Book comes out. 1 o'clock this afternoon, the Beige Book comes out. That always alerts me to the idea that it's 2 weeks from today when the FOMC meeting will release. As far as other news is concerned, yes, the House is looking to impeach President Trump. Post haste, odds seem to be increasing in the House and the Senate that this is going to happen. Obvious headline risks present today. Can't say it enough. Use stops. U.S. stocks are kind of edging lower as investors have a lot to digest. Just to name a few: political turmoil, Lacey's whining, fiscal stimulus, higher treasury yields, the dollar holding off recent lows. It's holding back above 90 again now. Beginning of earnings season. So there's a lot on the minds of investors, obviously. Crude prices continue strong after a surprise drop in inventories announced by the API last night. The EIA, still yet to come out today at 9:30, is expecting a 2.2 million barrel draw after an 8 million barrel draw last week. The VIX up a little bit this morning. Last time I checked, 23.57. The dollar index up a little bit also at 90.26, just holding above that 90 level. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel as you can get notifications when we do go live. I want to say good morning to everyone this morning. We've got quite a cast here. Good morning, Charles. First one in the room. You win the prize. Will Doherty, good morning. Vlad, Danielle, Guten Tag, Michael, Main Point Big Ideas. Cesar, good morning. Mike Magallanes, the chef, is here. Let's have some breakfast. Danny, good to see you. Vast West, Main Point Big Ideas. Is it weird to not take a trade until the market gives me what my trading plan is? Not weird at all, Main Point Big Ideas. I feel like Johnny Carson when I say weird, very weird. It is not weird at all. It's what you should be doing. If you're taking trades that are outside your strategy, outside your plan, there's no plan for them. Be patient. Wait for the market to give you your good trade levels. Wait for the market to give you what your trade plan is asking for. At the very least, even if they're not winning trades, hopefully it's going to help you to maintain good risk management if you do that. Every time I start trading outside of my trading plan or just taking trades because I want to make some money back, I usually make things worse. So main point, do what you were just talking about. Don't feel like it's weird not to trade. It just creates over trading when you do that. Brian, good morning. James, good morning. Kobe, just here for the heckling. Excellent. I always like that. Sharon, good morning. Art, David, good morning. Richie, level 2, good morning. JD, the Dancing Bear, is in the room. Good to see you, JD. Shane, Esteban, level 2, bought 2 ES Peaches, 3 weeks expiry. All right. Level 2, oops, I meant puts. I was wondering what peaches were. All right. Well, hopefully those will pay. Those will play out for you. Felipe, good morning. Modesta, Felix, the infamous Felix Escobar. Dan, hey traders, have a wonderful day. You just dropped some gold off on us. Thanks. You just dropped some gold on. Oh, good. I hope that's helpful. Main point, yes. Rod Bulldozer. There's a new name. Maybe a couple of new names here. Yes, Lacey's having trouble waiting for the opening bell. That's for sure. She's got a little impatience problem sometimes. But if you are new to the market forecast, make sure you check out the market recap today at 3 o'clock. Dan, I'll be looking forward to seeing you there. I've got a pretty full group here for group coaching today, but here's the link. It'll still let you impeaches. There you go. Joking. Don't people don't get angry. We're not going to get angry. Green red. Hope you caught that opening range in gold this morning. It was a nice little trade there for a breakfast trade there, right? So yeah, again, if you are interested, come to the group coaching this afternoon. It looks like it's relatively full, but it will continue to let you register for it. Most of the time you get about 50-60% of the people that register actually show up. So there should be room for you. And we are talking about expanding the size of the room so we don't have to worry about that. Good morning, Prophet Ian. Andre? All right. Let's go ahead and see what we're seeing in these markets here this morning. I think I'm done yammering, so let's do it. Now, if we can get Lacey done yammering, we'll be in good shape. So, as always, starting with the daily in crude, it is rollover this week. We're still trading February. The volume in the February contract is about 4 times, maybe a little less than 4 times what the volume in March is. So we're still trading February. Overall, the volume has remained steady overall. Now, overall means all of the contracts of crude oil, and there are many of them. Crude trades out about $10 into the future, so there's a lot of open interest and volume that is occurring in future months. So just kind of looking at what we're seeing, the volume does appear to be falling off in the front month, but that's just a function of rollover. We added 8,600 in open interest on this move to the upside. Also might be somewhat of a function of rollover. So we have to be careful when using volume and open interest for an indication for participation and accumulation of positions during the rollover. And since crude oil rolls over every month, we only get about 3 weeks every month of clear information as far as open interest and volume information. So the thing that strikes me is, yes, we have fundamental information, keeping structure, good to the upside. If I was going to look for anything that was telling me that the momentum might be falling off to the upside, is we're getting really relatively close to our weekly kickoff high, which is 54.60. We're about 70 points away from it on our high from last night. Also, our Hull moving averages are now holding above price and looking like within a day or two, if we don't continue this move to the upside, they're going to cross over and start to look to the downside. So that might be an opportunity for us to get some sort of a pullback in this upside move in crude oil. Again, 50.75 is weekly kickoff low. And that's an area where I would start to think that we may start to begin to break the upside structure that we're in. EIA looks for a 2.2 million barrel draw at 9:30 Central today. The API yesterday had a 5.8 million barrel draw. So that's kind of keeping bidders under this market. Let's see what we're seeing here as the market is opening up. I would have to say that we're leaving our opening range at the high of the regular trading hour session. I can't necessarily see that on this 30-minute chart. it just looks like that might be happening. We had some overnight longs that got bailed out during the regular trading, or excuse me, during the London session. Settlement is exactly at our overnight low, 53.21. Just put that on your charts. The market opening with a gap, attempting to close the gap relatively quickly this morning. So far unable to do so. Looking forward to seeing how the market might react near our settlement, our overnight low, as well as value high from yesterday. That might be one of the first opportunities that I might look for an execution, because, again, it's kind of a target-rich environment, and it allows me to limit my risk. Again, if we have the opening range at the high of the regular trading hour session, this might be a pretty decent opportunity if you took that trade to look for a target down here around, again, this target-rich environment. Not only is it value high, it's over an overnight low, it's settlement, and it's also point of control from yesterday. So this is really kind of a target-rich environment for an execution or for an eventual target. It looks like we've just closed the gap. Let's see here. High 53.28, low 53.28 to the tick. We just closed the gap. So watch for an execution in this area between our high from the range from yesterday, as well as our extremely target-rich level at our weekly, at our overnight low. I almost want to sit here and watch this, but we do have to move on. Let's take a look at the E-mini S&Ps now. Medium time frame structure remains strong. I mean, look at what we've been doing since November. Just continually putting in higher highs and higher lows, higher highs, higher lows. Volume and open interest has become a little bit uninteresting as we've been kind of consolidating up here. Seems to make sense. We added a 3,800 in open interest on this move yesterday, which really was kind of non-directional when you look at it on the daily chart. We could be potentially forming a bull flag, is why I've put these trend lines here. The bull flag is a move contrary to the bigger picture on smaller ranges. And if we do break out, I would say our overnight high, 38.05, I'll really look for a move up to that 38.40 weekly kickoff high. If we break the low here, the thing about the bull or bear flag is we don't know it's true until it proves to be true. If this proves to be a bull flag, we will break out the upside and continue higher. Not suggesting by any stretch that that is actually or going to happen for sure. Just keeping an eye on the fact that we may be forming that bull flag. This market is thirsty for new information. Goldman Sachs warned yesterday that they're looking for some sort of a pullback in equity prices in stocks. One of them said even went to so far as to say correction, but somebody else said maybe just a little pullback so we can get ourselves together and then we can continue to move higher. Who knows what's going to happen? Let's take a look at the 30-minute trade, the 30-minute chart here. It's been having a little bit of trouble holding rallies in the short time frame here. So here's kind of what we're looking at as far as the bull flag is concerned, just on the 30-minute chart. Let me fix that a little bit here. So the market, this is Monday, holding, all right, closing right on its highs. This is Friday. Monday, trying to push higher, unable to continue to push that higher. Yesterday, trying to push higher, pushing lower, kind of coming back into range. It does seem to be, to me, struggling to hold on to rallies. So we're going to look for our opportunities probably closer to the extremes of this potential bull flag. Just looking at what we're seeing this morning, this is a relatively defined short time frame trend to the downside. Again, that bull flag possibly forming. There's going to be no gap on the open this morning. As a matter of fact, it was looking like we may open below value. Our overnight inventory is a little bit short. It looks as though they are unraveling here before the open. If we open inside range and inside value, I'm going to try and stay patient. I may even wait for that initial balance, that first hour of trade, to establish a range before getting involved. Main point, there's an idea. If I'm looking at that, I may have to avoid taking secondary trades until the market gives me an opportunity to trade at that hypothesis, where that hypothesis is telling me to look for. We were in a slight imbalance before the open. We're back in range, back in value. Look at where the value has been. We've had value relatively constant through this whole time. This market, as I said, is thirsty for new information. So stay patient today. Unless you have 3-4 hypotheses. What are you going to do? How are you going to manage this day? Are you just going to look for something and say, hey, this looks good, let's go for that? No, have an idea of the things that you think the market might do. And when one of them begins to come true, you trade to that strategy. You trade to that market state. Take a look now at the NASDAQ. All right, here we go. So the NASDAQ has not been able to maintain price over last week's weekly kickoff low. It remains this week's weekly kickoff high. It remains this week's weekly kickoff high. We do see the possibility of creating a little bit of a bull flag here. Hang on one second. Volume has been maintaining. We've seen a little bit of an increase in open interest. You see volume kind of holding steady here, 3,400 increase in open interest on a down day yesterday. Overall upside structure remains strong to the upside. We got to remember that. Let's take a look at the 30-minute chart and see what we see. It almost looks same as the S&Ps, right? Although it is a little bit of a different situation. No gap, no overnight inventory with which to work with, I should say. I'm gonna stay patient. If we had opened outside of value area, I think that would have given us an opportunity early in this session to look for rejection of yesterday's value or reacceptance of yesterday's value. We're already seeing reacceptance of yesterday's value. Very little change in the perception of the value of the NASDAQ index here as we are right back to settlement, very close to settlement from yesterday. Again, value kind of stagnant here. The market is waiting for new information, so try and stay patient. I'm really kind of interested in seeing the market get above this level and to test our overnight high on this 30-minute chart to look for an opportunity. Main point, the way I look for inventory, if you will, is based off of settlement. Okay, so here's where settlement was from yesterday. A lot of the overnight inventory was moving price higher than settlement, which tells me that it's probably shorter time frames, weaker hands buyers accumulating longs. Well, the London session opens, that stops. They unravel those positions. Perhaps they even got a little bit too short because now we're below settlement, and obviously, if that is the case, then we've adjusted overnight inventory back to settlement, so there now is no inventory. Inventory in the overnight is really kind of looking at shorter time frame traders and the possible positions that they may be may be holding when the regular trading hours open. All right, so we'll be a little bit more clear about that here in the future, and I appreciate the question. Gold. So we've seen volume really kind of dry up, just like a grape on the vine here at these recent lows. Hardly able to get a true test of weekly kickoff low on Monday. Open interest, we added 4,900 yesterday, so that indicates possibly a little bit of new business, a little bit of new buyers coming in this direction, okay? So those new buyers didn't really bring in a lot of volume, but the increase in open interest is encouraging for a change in the downside auction. The downside auction may be over. We may be beginning a new upside auction. We have, in essence, an inside day and extended trading hours today. What are we seeing on the 30-minute chart? Well, we had a pretty decent opening range trade this morning. We see the market kind of moving from a short time frame move lower to perhaps the beginning of a short time frame move higher. Here's that weekly kickoff low that we weren't even able to get to. So we're kind of working this rising triangle or this rising wedge here. The market, this is an overnight profile, but the market really kind of remaining inside Friday's area of value, which there's a lot of repair in this. So it just makes sense that we're spending a little time doing some repair there. We opened above value from yesterday. We had here, main point, this is long overnight inventory. And then again, when the London session opened, a lot of this inventory got nervous. A lot of these short time frame longs got nervous, and they liquidated some of those positions, which brings selling into the market, which brought the market all the way back down, perhaps to this level. Now, is that enough to adjust that inventory? It is if there are some longer time frame, newer buyers coming into the market during the London session. And gold is one of those products that does tend to bring in some volume and perhaps some bigger money traders, in that London session. So that's about 2:00 Central Time. The opening range in gold remains the low of the regular trading hour session. It is 1850.30 is the low of the opening range. The high of the opening range, that first minute of trade, is 1851.50. Well, we haven't even taken a look back to there. We opened a little bit out of balance because we opened out of value, and we continue to trade a little bit out of balance. So we've got a pretty decent move on the opening range. We were unable to take out the overnight high, really just kind of lining up with the range from yesterday, the range from the previous night. So we're seeing some pretty decent opportunities. Again, I try and stay patient when the market is in range, even more patient when the market is in value. Okay, but we didn't even have a gap today, so the market largely in balance, looking at the activity from last Friday's big down move. We're digesting that. We got a little bit of a pullback. This may actually end up looking like a bear flag. If we break this structure, we may be looking for an opportunity, again, possibly to test that weekly kickoff low. Okay, I'm getting a little long-winded here again. Sorry about that. The euro. Last week, we went around the world in the euro. We went weekly kickoff high to weekly kickoff low. They still remain. Volume slows near this weekly kickoff low. You can see it right here. As the market has gotten cheaper, it has provided less opportunity and less participation. Okay, that's what we're looking for. If we're looking for any continuation, we want to see volume increasing, not decreasing. Open interest on the up move yesterday, approximately 4,600 in open interest added. That's new buyers. That's indicating buyers were found near this weekly kickoff low, although the volume was not that great off of it, but we did add 4,600 in open interest. Is that a new auction to the upside beginning? Very well, might be. A recent boost in the dollar has kind of created now a 3-day balance. We're going to be putting a box around this. We're going to be looking for opportunities at the extremes of this 3-day balance and nothing in the middle. Nothing in the middle. So settlement right up here, 122.17, a little long, maybe a little bit short, but right back into value from yesterday. Looking at this as an opportunity to rest and just to wait and see if we get some better opportunities. Perhaps another look down at weekly kickoff high could be an interesting thing for us, but inside value, right at point of control, we are just so in a wait and see mode here in the value area and in this market. So it's kind of off my radar for now. Just a watch and see, look and monitor for opportunities. Here's the Japanese yen. Recent lows slowed volume also. Okay, no real test of weekly kickoff low. We have a look above weekly kickoff high in the overnight session today. Volume is going to be a little bit higher today. That's encouraging me to think that I want to look for opportunities to buy weakness because, boy, volume really shut off. What day is this? Monday, Tuesday, Wednesday. On Monday, at this low, volume really shut off. And that's, pretty indicative of the end of an auction. Yesterday we actually lost 500 in open interest, so a little bit of a short covering situation here in the Japanese yen yesterday. Now a test of weekly kickoff high. What's it look like on the 30-minute chart? Well, we're inside value, but value yesterday was an imbalanced move to the upside. Again, probably a more short covering than new longs coming in. So overnight longs, overnight inventory too long. We've capitulated out of there. We're basically trading right at the point of control from yesterday. In an imbalanced day, I'm certainly going to be trying to stay patient. I'd much rather look for an opportunity at one of the value extremes from yesterday before getting involved. And again, we had a little bit of a test over weekly kickoff high that did not maintain. Buyers up here just got too long in short time frame. They weren't good, strong buyers. They've gotten out now. So again, inside value right at the point of control from yesterday. I would certainly think that I would want to trade to try and remain very patient in that regard. Okay, yes, Vlad, waiting game. Good morning. Some analysts speak of a market crash coming from correlations with bonds. Anything is possible. Don't let your past get into your futures. Absolutely. Vlad, yeah. Main point, good. Marco, always good to see you. Mr. Shine's Mystery Channel, thank you for the information. No heckling today. Well, it's okay. I can take it. I look forward to it. All right, everybody have a great trading day. Dan will be with you for the market recap. Don't forget the group coaching today at 1 o'clock Central. No FOMC entanglements. So I'm looking forward to having a great session. Take your deep breath. Stay humble, grateful, and creative in your trading today. I know it's going to be a challenging day in many arenas in the world and in the markets. So make sure you protect yourself. Always use your stops. Get out there and profit. Trade well today.